Hi friends, this is Dr. Jayalakshmi, Associate Professor and Head, Department of Commerce, SKSS Arts College, Tirupandal. Today I am here to discuss the topic relating to auditing. So let's see what is meant by internal control. Internal control refers to the process and procedures implemented by an organization to ensure the integrity of financial reporting, compliance with laws, and operational efficiency. Definition and purpose. Internal control encompasses a set of policies, procedures, and practices that organizations establish to manage risk, ensure the accuracy of financial information, and prevent fraud. The primary purpose of internal controls include safeguarding assets, protecting the organization resources from theft, misuse, or damage, ensuring accurate financial reporting, providing reliable financial data for decision making and compliance with regulations, promoting operational efficiency, streamlining processes to enhance productivity and effectiveness, compliance, ensuring adherence to laws, regulations, and internal policies. So let's see the components of internal control. According to the Committee of Sponsoring Organizations of Threadway Commission, effective internal control systems typically include the following components. Control environment, the foundation of internal control, which sets the tone for organization, emphasizing integrity and ethical behavior. Risk assessment, identifying and analyzing risks that could affect the achievements of objectives. Control activities, the policies and procedures that help to ensure management directives are carried out, including approvals, authorizations, and verifications. Information and communication, ensuring relevant information is communicated effectively across the organization. Monitoring activities, ongoing evaluations of the internal control system to ensure its effectiveness and make necessary adjustments. Importance of internal control. Implementing robust internal controls is crucial for organizations to prevent fraud. By establishing checks and balances, organizations can detect fraudulent activities and detect errors early. Enhance accountability. Clearly define roles and responsibilities help ensure that individuals are accountable for their actions. Improve decision making. Accurate and financial information supports informed decision making by management and stakeholders. Now let's see the types of internal control. Segregation of duties ensures that no single individual has control over all aspects of financial transaction. Authorization controls requires that transactions be approved by designated individuals. Access controls limits access to assets and information to authorized personnel only. Reconciliation procedures regularly compares records to ensure accuracy and completeness. Physical controls involves securing physical assets to prevent theft or loss. Documentation controls ensures that all transactions are properly documented and recorded. Independent checks involves periodic audits or reviews by independent parties. Training and supervision ensures employees are trained and supervised to follow internal controls. Information processing controls ensures the accuracy and completeness of data processing. Monitoring controls regularly assesses the effectiveness of internal controls and makes necessary adjustments. So let's see what is meant by audit program. An audit program is a detailed plan of auditing work to be performed, specifying the procedures to be followed in verification of each item and the financial statements and giving the estimated time required. Meaning, an audit program is a detailed written statement designed by the auditor indicating the work to be performed by the audit assistants, specifying the time limit for completion of work, instructions, and guidance to the audit staff. In short, it is a tool for planning, directing, and controlling the audit work. An audit program is a detailed plan of auditing work to be performed. It specifies the procedures to be followed in the conduct of audit more efficiently. The auditor outlines the whole procedure of audit from the beginning till the finalization of audit report. Audit program is generally contained in the audit notebook. Now let's see the definition of audit program. Professor Meigs defines an audit program as an audit program is a detailed plan of auditing work to be performed, specifying the procedures to be followed in verification of each item and the financial statements and giving the estimated time required. Details of an audit program. The following are the details of an audit program. Name of the client, nature of operations and business of client, review of system of internal check, date of commencement of audit work, duration of audit work, accounting system followed in client organization, review the report of previous auditor, review the remarks, instructions or objections raised in the previous audit report. Examine the various ledger accounts and subsidiary books. Examine the statutory books and registers, profit and loss account, and balance sheet. Now let's see the advantages and disadvantages of audit program. Advantages: helps in estimation and division of work, helps in fixation of responsibility, helps in future planning, serves as a guide, valuable evidence, and uniformity. Now let's see the disadvantages. It's mechanical, no division of work, loss of initiative, rigidity, shelter for inefficient staff, and unsuitable. Now let's see what is meant by test check. That is test checking in auditing. Test checking in auditing is a technique where auditors examine a sample of transactions rather than reviewing every single entry. It's based on the principle that if randomly selected transactions are accurate, the rest are likely accurate too. Key features of test checking. Selective verification. Only a few representative transactions are checked. Sampling based relies on statistical sampling methods. Efficiency oriented saves time, cost, and effort compared to full audits. So let's see the advantages and disadvantages of test checking. Advantages: time saving, speeds up the audit process, cost effective, reduces labor and audit expenses, focus on key areas, allows auditors to concentrate on high risk or complex transactions, useful for large organization, idle when transactions volumes are high. Now let's see the disadvantages. Risk of misusing errors or frauds. Not all issues may be detected. Not suitable for small businesses where full checking is feasible. Relies heavily on internal controls. Weak systems can undermine its effectiveness. Auditor responsibility increases. Errors in unchecked items still fall under the auditor's scope. So let's see the difference between auditing and investigation. Auditing, the process of inspecting the books of accounts of an entity and reporting on it is known as auditing. Investigation, an inquiry conducted for establishing a specific fact or truth is known as investigation. Auditing, its nature is general examination, and investigation, its nature is critical and in-depth examination. Auditing evidences. The evidences are persuasive in nature. Investigation. The evidences are unquestionable, therefore, its nature is decisive. Time horizon. Auditing, it is annually, and investigation, it is as per requirement. Performed by. Auditing is performed by chartered accountant, and investigations are performed by experts. Reporting. Auditing, is reported for general purpose and investigation is reported as confidential. Obligatory. Auditing is obligatory and for investigation it is not obligatory. And appointment, then auditor is appointed by the shareholders of the company, and investigation, the management or shareholders of one third party can appoint investigator. Thank you.